Good evening, everyone. Welcome to the Accord Security Services Group. I am here with the latest market evening update. The Indian stock market saw a brief dip after a opening on Wednesday. Although the domestic indices Sensex and the Nifty rose ongoing foreign outflows and weak earnings, the surge was mainly driven by the major contributions from HDFC Bank and the Bajaj Twins. Gift Nifty surged and then fell back on Tuesday. Here we can see it leaving a long upper shadow in the current bullish candle, and the current trading price is 24,489. On Wednesday, the Indian market continued to rebound after hitting the recent correction lows. Today, the stock exchange Sensex index fell 138.74 or 0.70% and to close at 80,000 081.87 points, while the Nifty 50 index dropped by 36 point or 0.15% to close at 24,435 points. The Nifty 50 formed a upper shadow candle on the daily chart, signaling the signs of stabilization or for little bit consolidation. More on this point. Influenced by the mixed global market performances, Indian indices opened lower, with the Nifty index falling below 24,400 points. However, buying at lower level erased all the losses within the first hour, bringing the index in positive territory. Nevertheless, selling in the final hour dragged the Nifty below 24,450. Nifty surged and then pulled back today, forming a lower upper shadow the candle on the daily chart, daily time frame, the indicating continued short-term selling pressure in the market. If we can see here, it will likely to touch 24,000 zone here, and it will bounce back from this support area. The selling pressure in the market. There is a possibility for further testing the support zone around 24,000 points level, as I mentioned in the support here with the yellow mark. If we talk about the Bank Nifty saw a slight dip on Wednesday, closing at 51,339 points, or down 0.04%. It almost formed a long upper shadow candle, like just Nifty 50 here, and with no signs of stabilization awaiting yet. Despite Bank Nifty remain in uptrend channel, it's been experiencing continuation of correction due to the market influence, currently forming a consolidation pattern with a short-term downside risk. The Bank Nifty holding is uptrend channel, but if it's break through this pattern, it will likely to be the touch this zone, which is almost 50,000 or 50,010, about to be retest or reconfirm its support again. Now let's talk about some top losers or top gainers of the day. If we have side on the top gainers today, we have the Deepak Fertilizers, Amber Enterprises, First Source, Coforge, and Persistent System are the top gainers of the day. We have also losers of the day, which is the Chennai Petro, Rajesh Exports, Gujarat Florence, ABB India, and the Simons are in the top losers of the day. If if we talk about the Asian markets, the Hong Kong Seng Index rose 1.27% to 20,760 points. The Japan's Nikkei Index fell 0.80% to 38,104 points, and the South Korea Kospi Index increased by 1.12% to 2,599 points. In the USA market, S&P 500 dropped 0.05%, Dow Jones fell 0.57%, and the Nasdaq gained almost 0.76% here. The VIX, the market fear gauge index, the VIX fell by 1.53% in the early morning, and indicating the lingering short-term fear among the traders, and leaving its long shadow here with the high volume and still not able to break its heavy support and resistance and still maintain its sideways movement in the channel. And if we go to the initial public offering today's, we have here the Godwari biorefineries here. The Godwari biorefineries initial public offering has set a price band of 352 per share. The expected listing price is 352 though, with an anticipated percentage return of 23.15%. And we also had a top stock news for our group members. The GMR Group announced the Wednesday that it has the secured debt financing 630 million from the Abu Dhabi Investment Authority. The proceeds will be used to refinance the debt of its flagship group entity, GMR Enterprises Private Limited, has more to go. And second one is the TVS Motors second quarter results. Two-wheeler sales grew by 14%, exports increased by 16%. And with the approach of Samawat 2081, the Sensex index has risen by 23 and Bombay Stock Exchange Auto Index has surged by 15%. Most auto stocks have delivered double-digit returns, with 8 stock gaining between 15 to 115%. And the other hand, we have the SBI update though. The leading insurer SBI Life reported a 39% year-on-year increase in its consolidated net profit for the second quarter, reaching 5.29 billion. The net profit for the same period last year was 3.80 billion. During the reporting period, net premium income saw a slight year-on-year increase 1%, reaching 202.66 billion. And if we talk about some key takeaways, the Indian stock indices closed lower after a volatile day. At the close, the Sensex index fell by 138.74 or 0.17% to almost 80,081.98 points, while the index Nifty 50 dropped by 37.90 or 0.15%. Here we can show you in the chart 24,435, and the drop by approximately 2,117 stock advanced and the 1,647 stocks declined and 99 stocks remained unchanged as always. The IT index also rose by over 2%, while the sectors such as capital goods, power, and pharmaceutical companies fell by 1%. The Bombay Stock Exchange Mid Cap Index also rose by 0.5%, and the Small Cap Index increased by 1% over 120 stock on the Bombay Stock Exchange, hit 52-week highs, while more than 160 stocks reached 52 weeks low. We concluded that the investors' sentiments turned pessimistic due to the poor performances and the instinctive reactions for the foreign institutional investors, which dragged down the market sentiments. The benchmark indices Nifty Sensex closed lower again today. The trend of large cap stocks outperforming mid cap and small cap stocks may continue. The reverse trend of federal institutional investors selling is likely to persist. This will provide the strength to large financial stocks, especially the bank like HDFC, ICICI, Axis, and the Kotak, which are reasonably valued in this market. Investors can look for trading opportunities in the financial stocks. So now let's have a look at the performance review, the stock we recommended earlier. We have here the Wiseman India stock, which we recommended the trading session on October 23rd. We recommended Wiseman stock, which rose 4.5 on intraday. The country stock is in a clear upward channel. We can see here it's clearly upward channel and continue its trading in the upward channel moment. After a short term correction, the stock has started to rise with increased volume, indicating a strong support in this range. A significant rebound opportunity is anticipated more. Now we talk about the stock recommendations. The first one is the Energy Mission Match India Limited (EMMIL). The potential is the energy equipment industry is impressive, especially in the context of increasing global demand for renewable energy, and its market prospects and extremely broad. The company's steady growth in the recent years reflects its solid business foundation and strong market competitiveness. Through continuous technological innovation, EMML is not only able to improve product efficiency but also flexibility, response to the market changes, and the consolidate in the industry and leadership. The experience the management team provides strong support for the company's strategy formulation and execution, ensuring the company's long-term development looking forward. With the promotion of renewable energy policies, increase infrastructure investment. EMMI is expected to further expand its market share and bring considerable returns to the investors. AMMIL will undoubtedly become the high quality choice in the eyes of investors. And the second one is the ZLIM GFIN has demonstrated significant investment value, and its multidimensional factors such as financial performances, market potential, management team, and shareholder returns provide a good foundation for potential investors. The company's stable revenue and profit growth reflect its strong execution in industry. At the same time, the financial technology continues to evolve. Milegray Finance has opportunity to expand its market share with innovative services. Under the leadership of management team, the company is able to respond flexibility to the market changes and ensure continued strategic development. Its solid shareholders return system also enable investors to enjoy a sustainable dividend income. Therefore, in the context of considering future economy recovery in the positive industry development trends, Milegray Finance and the investment is needed to vote the choice of investors. And third one here has Somatex. Somatex shows a significant investment appeal in the current textile industry context. First, the industry positive outlook is driven by economic recovery and export growth, allowing companies to capture market opportunities. Secondly, good financial health reflects stable revenue and profit growth, which enhances investors' confidence. In addition, so many as well known brand has strong market position and loyal customer base, further strengthening its competitive advantages. The company continues innovation and investments in R&D have improved product quality and diversity, thereby enhancing market competitiveness. Finally, an experienced management team can effectively respond to industry changes and provide strategic support for the company's future. When all these factors are combined, so many textile industry stocks present considerable investments potential and worth keeping an eye on it. And for all of our viewers, investments involves risks and decisions should be made with caution. Explore investment opportunities to inspire your journey. Thanks for staying with us till the end of the video. This guidance is intended to share perspectives with the final decision making authority resting with you. Take care.